Alright, bootcamp day 2. This is the first time I'm gonna be actually showing you guys something. So today I'm gonna be showing, hold on, key opens. We're gonna just talk about key opens because today we had some good examples. Which ones do I use? Usually I just use 10 a.m. and midnight open. There are some people who use New York market open, stuff like that. I usually don't, but you can. Which is also a nice open to use is when we have news, at like 8:30. That's also a good key level, but I would just mainly focus on midnight and 10 a.m. And true day open can also be good, which is at 6 p.m. Right here. I usually just mark them out by going on the hourly. This is how I mark out midnight. Just go on the hourly, find the open. So this is the open, right? Because we open we open and we go bearish and we close bearish on this candle, right? So this is the open, not the wick, the open. So on a bullish candle, this would be the open, right? Because we open, we move down a little, and then we go up, right? That's the open of a bullish candle. Oh fuck, what the fuck. On the bearish one, right, we open, we go up a little, we go down, but we close bearish, so this would be the open, right? I think that's kind of easy. I hope nobody struggles with that, but yeah. So basically, I mark out the open on midnight on the hourly. It's just easy and quick. 10 a.m. is during the session, so that I just mark out on 1 minute. So midnight, what could you have taken today with midnight? What did we have pre-market? A bunch of accumulation, right? What did I see? And perfect clean AMD setup forming. Because what did we do here? Market open, manipulated to the upside, distributed to the downside, right? Clean as AMD setup. How could you have taken this? You can already see midnight open was above it. Just look for any extra confluence, because the more confluence you have, the cleaner it will be. Obviously we had this 5-minute gap, but we also had this 5-minute gap that was unfilled because the other one was actually partially already filled. Yeah, if you would have put a limit on this gap, which would in my opinion be more optimal, but look at the distance between midnight and this gap and these highs. I don't know. Basically I just shorted off of this gap, just the CE, because we had midnight below it, we had this gap, right? Technically we have this high, which I think edged the CE. Yeah, see, it edged the CE, so I just limited the CE. And I think also with the fib would have also given you some extra confluence. Yeah, 7-9 level, easy. This was textbook in my opinion. So you just limit the CE. You can do a 10-point stop. You would have covered this 5-minute gap if you did a 10-point stop. So even if it wanted to go higher and tap the CE of this 5-minute gap, you would have been safe. So yeah. What would also be clean or add extra confluence is this 5-minute inverse. Could have also used that CE. Would have been on almost on the tick, right? So a bunch of gaps. Inverse gaps, normal gaps, fib, midnight, AMD. Very obvious in my eyes. Stacking all these confluences. Boom. You could have had a banger of a trade like this. Let me just remove this. Well, yeah. Depending on what you were going to target, you could have, target this 4-hour gap. Start of this 4-hour gap, for example, would have given you a 10 RR clean ass trade. So that's one example of how to use key opens. You basically use it as extra confluence, right? You don't just want to randomly limit the key open. That's kind of gambling. I mean, that is gambling, basically. You want to add extra confluence. It needs to make sense, right? In this scenario, as I showed you, we had AMD. So I wanted us to see us manipulate to the upside since we had big high time frame point of interest below us. So I want us to see us go and manipulate up, fill like a 5-minute gap, tap in CE of a 5-minute gap, whatever. We have the midnight as extra confluence, boom. That's how we use it. Then 10 a.m. we had also on the same day, which also delivered, right? So we manipulated, we distributed to the downside. I had a reversal zone over here, so I knew we were going to reverse off this zone. I basically bottom ticked this move. It's in the P&L in the Discord if you want to check it. So yeah, I bottom ticked NQ right here. I TP'd in this 5-minute gap. It was in 4RR, so it was enough for me. Could have held it longer, but whatever. But if you use the fib, you can see, right, 10 a.m. open on this candle. You can see 10 a.m. bearish candle, so the open is right here. We have the fib, which we can see that we're that 10 a.m. is like below equilibrium, so that aligns nicely. We have the 618 level that aligns kind of with 10 a.m. So it'd be nice to maybe long off of this 10 a.m. Confluences are basically, we distributed down, we tapped into a high time frame point of interest, we react from it. I think we even tapped the CE. I'm not 100% sure because my reversal zone was based off of something else. But if we did tap the CE, that would have, yeah, we tapped the CE. Didn't cleanly react from it, but I mean, actually we did. So yeah, right, we tapped the CE of a high time frame point of interest. We start reacting from it, like reversing. So I pull out the fib, right? So maybe we want to go back up. You can see we have 10 a.m. and the thing with 10 a.m. is usually we either close above it and we like, you know, we trade above it, like this example. 10 a.m. opens here, we trade above it, and then we want to see a retrace to 10 a.m. to then bounce off of a long. Can also be the opposite way where we have 10 a.m. that opens, we trade downwards, and then we tap 10 a.m. and then we go down, right? Both scenarios, just the opposite. This is what you most likely want to see with 10 a.m., which works the best. And in this situation, as you can see, we trade above it. We want to see us go into discount. 10 a.m. is in discount, so we tap 10 a.m. This you could have entry triggered, for example. Could have just waited for a simple confirmation like this 1-minute rejection block, right? Tap the CE of the rejection block and you could have longed that shit. Let me quickly do an example. Just long this shit until, I don't even know where you want to long it. You could long until midnight. These highs, doesn't matter, right? 10-point stop, boom. Could have longed that shit. Yeah, that's how you use key opens, right? And you can see that you can use them most of the time, multiple times. Like for example here, we react off midnight again. You want to pair it with different confluences though, right? You don't just blindly want to limit these levels because that's just gambling and you won't be winning that way. You want to use a bunch of confluences like I showed you, right? And it also needs to make sense, right? Don't just randomly fucking trade these as key level opens. And also sometimes they can also be useful to kind of know where the market will be headed. So for example, if we have a key open, let's just say, wait, I'm gonna show an example. So we've been price has been trading like this, right? And then we get our key open, for example, midnight, right? Midnight opens here. Then the rest of the sessions we trade like below it. Then usually we want to see us trade back up to it and then maybe move down. Usually this happens. If we trade below a key open, like during a whole last 2 sessions or just like a long time, usually price will come back to it and then move down. So it's good for like knowing where the market might be headed that day, right? Yeah, that's basically it for key opens. If you guys have any questions, let me below in the comments because I kind of been speed running this shit, but it's kind of simple, that's why. So I hope everyone understands it. If you don't, just comment and I'll try and help you guys. But yeah, I'll see you guys in the next video.